Good day and welcome to the webinar Business Valuation. In addition to the training video, I recommend two other tools. First, the training manual. You go to the Learning Center and then you click here Webinar Business Valuation here on the manual. The manual opens and you see the manual Webinar Business Valuation. We see here the training information, case study with first instruction and solution basic on evaluation. Second, you need a BizCow login. You go to the BizCow site and then you click on Try Now without obligation. And here you can a BizCow login free of charge for the training. It's perfect if you have three windows open in your browser. The first window is Webinar Business Valuation, the manual. The second is your video on YouTube. And then the third, you can sign in BizCow. Here we are online on BizCow, and you see the Muster AG, our company for the webinar. Please stop the video now and set up these three windows for yourself. Now you are set up, I'll lecture as follows. In the video, I'll explain the theory and online experience. I'll tell you when to stop the video. You consult the training manual and practice the topics in the system. You go back to the video and watch the next chapter. I start with a short presentation of company valuation. First, of a company valuation, you make the basics. Financial indicators, economic data for the sector, economic risk data of the countries. Second step are the processes. You record the financial statements. Then you make the adjustment like true and fair view. You record hidden reserves, reduce values if necessary, increase liabilities that are valued too low. It's important that it is consistency in presentation. Third, items not necessary for operations. Here we can have positions in the balance sheet and also in the income statement. Fourth, the ESG and market criteria. This you can also record for your company, but this is optional. What I recommend you that is the product portfolio and market development criteria. And then we go to the reporting. We have different valuation methods that fair value, DCF multiples and other. We have also a rating and financial analysis. So we can see the trend of your company. It is important to distinguish between a company's value and its price. As with any commodity, the price is determined by the relation between supply and demand. There is no binding procedure for determining this. There are many methods that can lead to different results. However, it is important to choose the method that best suits the company and also takes into account the industry and sales market. The result should then be checked using additional methods. In price negotiations, it is in the nature of things that the transferring party and subsequent party look at the final side from a different perspective. Surrender, they are emotionally connected to their company and usually base their valuation more on the past. In practice, it is often observed that the value of the company is overestimated. If the investment of money, time and effort or the realization of retirement provision serve as a benchmark. The other side, subsequent, you approach the valuation rationally and are interested in the growth potential. Ultimately, they want to pay or get credit for as little as possible. Therefore, an exact financial analysis as well as the assessment of qualitative factors is crucial when preparing an M&A project, which we will look at in detail below. Before we analyze and advise, let's go to know the basics on which a company valuation is based. We click here on the name of the company, Muster AG, and now we see the basic entry of a company. Here we have the address, we have here the currency, choose your currency, how you will figure in the balance sheet or income statement, 1-to-1, thousand or millions, then the legal form, the tax we count in the valuation, and then what is very interesting is the industries. You can choose from more than 50 industries and choose your industry and go also the white. The white is the percentage of the sales in this branch, and also the market area where you sell your products. If you need more information, you click on the question mark. This classification is required for two rating factors: financial indicators of the bank and economic value of the industry. Please stop the video now and take a look at the basic data from Muster AG. And then please go to the manual and read the case study chapter 2. Now we will see our data in the balance sheet and income statement. You see here at the top the years. We can go back 21, 22, 23, and we go down, and you see all the figures are on the system. If you see a bold key, you can click on, and you see here the hidden reserves for inventory, unbilled services. This figures comes from the case study in chapter 3.5. When we go here on 3.5, you will see here the corrections value for balance sheet and income statements. If you have 3 years recorded, you have to put in the corrections value for each year. Also for the tangible assets. And the intangible assets. For example, our intangible assets are too high in the balance sheet and our tangible assets are too low. Here you see also what it is with plus and minus. After the balance sheet, we have our income statements also here with the correction value. We have too high wages for the management. And at the bottom, you see the number of full occupied employee. When you go to the question mark, you look what you have to do there. More information. Please stop the video now and look at the corrections according to the Muster AG case study, our case study here. Now I will show you the ESG and market criteria. You click here on the ESG market criteria and you will see here are 5 areas. One is environment, social, governance, product portfolio, and market development. What I recommend you when you make a business valuation, the product portfolio is very important and the market development. And the ESG assessment give you also good points about the company. You click here. Can you click on minus? Then you see more, and you can click here on the questions, and you answer these questions. Now you can answer the questions here. For example, environment is a average, good, inadequate. Is there ISO 9001 certification, yes or no? If you want to recommend to appoint a command, you can open here and scribe a command. If you have recorded a command, it will be green. Go through all the answers here, the questions. If all the questions are answered, they will be get green here. What is also very important, the product portfolio, and here dependents, customers. Here there is possible risk if you have a large customer and also if you have a large supplier. Please stop the video now and take a look at the ESG and market criteria, especially the detailed questions from Muster AG. See also chapter 3.6 at the manual. Now we have all the information for a business valuation. Now we click on the printer here and then to analytics, on analytics rating and business valuation. First we will look at the fair value business valuation. We can activate, deactivate sections for the report. We let all active and click to the printer. Now we have the business valuation report for fair value 2023. Here we have the table of content, and here we see our business valuation fair value. The fair value is a combination of 3 values: the sales multiples, the EBIT multiple, and the asset value. We count these 3 values and divide it for 3. Here you see the formula. And then you get the fair value. Here you see the goodwill or badwill for each values. Here for the fair value, 1,000,001, EBIT a minus of 400,000. Here you see the fair value in a timeline. And green is the average of this timeline. Here you see the timeline sales multiple, then here the EBIT multiple, and you see also the EBIT multiple. It has a big range from 3 million to here under 1,642,000. And here our asset value is very stable. Here you see the balance sheet, and here also our hidden correction values that we recorded on balance sheet income statement. And here also with our latent taxes, reserves latent taxes from our recorded tax percentage. In our reports, we have also a lot of diagram. Here the balance sheet. Here you see also the income statements, the numbers. Also here with the correction of values year by year. Our cash flow statement. And here our company rating, also with the timeline. If you have a company in the red section, there is a company with risks. Here you see also the rating in the liquidity, financing and earnings. And here at the bottom you have the risk table from rating AAA to C. Next you see the financial ratios. For example, rentability, and here you see the market and here your company. EBITDA, EBIT, for example, profitability, liquidity, financing strength, and also the employees ratios, turnover employee and expenses for an employee with the industry average. And finally, we have an overview of the reference numbers. Please stop the video now and take a look at Muster AG Fair Value Company Valuation. For the DCF method, we need a budget. So we go to Balance Sheet Income Statement, and there we have a Budget Assistant. We click on the Budget Assistant, and for example, we let this 3 years. Change in sales, we say plus 5% is okay. We need operation liquidity fund of 2,000 or 2,050. And we change in cost, we can here say minus 2%. Personal costs will let be, and also minus 1.5% in the company expense, and we create a budget for 3 years. Our budget assistant now create 3 other years for our DCF company valuation until 2026. We save our changes and go to the printer, analytics, and here also to our DCF method. We can here print, and we have here our DCF assistant. What we see here is first we change the year here to 2026, and then we click on the printer, and now we see our assistant for the DCF. And here, go right up, and here we can change. For example, we want a residual value of 500,000, and then we create our DCF. We can change our WACC if you want, and go to print. And now we have our DCF business valuation. And here we see our amount with the EBIT multiple, average, and asset value. And at the back also with our goodwill, badwill, and then our figures for the DCF method. So you see all the calculations, and then also balance sheet and our analytics data. Please stop the video now and create your budget and then the DCF company valuation of Muster AG of the year 2026. In the third business valuation method, we look at in the script at the multiples method. In the script, you can read how function the multiples, and we have also here a table of the difference multiples in the industries, in the diverse industry, service, wholesale, retail, etc. And here you see the average of the industry. For example, construction industry here for sales 1.25, in a chemistry is 1.25 from the sales volume, and you see here the differences. In average we have 1.82. So it depends on the industry where you are, how is the multiples in sales, and also in the profit. But here we don't have this variation. We have here from 4 to 8. And in the sales we have here from 1.25 to 1.25. And in the third section we have here the EBIT multiples. Here also a big variation from 3 to 7. When we go to Biscow, we can also choose this report. We go to the printer, and then we let the year, the actual year here see. Note the annual account. We go to analytics, and then to business valuation, and here on the multiples. Go to the print, and here we can activate our multiples, and we can here also change our applied multiple. This comes from the industry. We can here say, oh, we want 1.75. If we go too high, the systems give us an advice what is the range for this multiple. But we can let this multiple be if you want. And here also profit multiple and EBIT multiple comes from the table that we have seen in advanced. We go to print, and now we have our business valuation with the multiples. And here we see also the sales multiple and the different multiples. And we see here also the goodwill, badwill from the multiples. If we take here, for example, only the profit and EBIT multiple, we can also choose this too here. In our model, the sales multiple was the highest. Now please read this chapter 373 and the table, and go to make the business valuation here, the multiples, and make difference changes and look how you can create your report. At least I will thank you for your interest and participation in the webinar. We hope that the topics covered were inspiring and informative, and that you gained valuable insights. Remember that the learning process is continuous, and we encourage you to apply and further deepen the knowledge you have acquired. Stay curious, stay engaged, and put what you learn into practice. Thank you again for your participation, and we look forward to welcoming you again at another Biscow webinar. I wish you much success, your business Biscow team. Thank you.